Hello, this is John Cavalli, and this is your May, yep, that's right, your May capital markets, financial planning, and economic review. Wanted to go into, first on our financial planning tip, I wanted to go into something that I have just a ton of responses on a post that I did, and it's the joint tenants with rights of survivorship. I had a half a dozen people call me up with questions on this, and so I really wanted to go back over it. Joint tenants with rights of survivorship is essentially a titling issue that, or not issue, it's a titling setup that you would set up on an account. And what happens is all these neat things, well, somewhat neat. When someone passes away, the joint titlee, or titler per se, joint tenants with rights of survivorship, will automatically get those funds. Okay, this is very powerful, and it's really slick, very neat, and it's used very, very frequently. However, the most common mistake that we have and that we see is that people sometimes accidentally put joint tenants with rights of survivorship on their accounts, and they forget that the will, it's going to override what their will want, as we said here. So bear in mind, if you put something with joint tenants with rights of survivorship, it's going, when somebody passes away, it's going to go to that other person no matter what your will says or does. You've just basically given it a titling situation. All right, how about the capital market part? We're going to keep this video in reasonable time here. Divergence, not the movie, haha, I'm being silly here, but at the S&P and the Dow Jones, which we don't follow as much, but the Dow Jones and the S&P have touched new highs multiple times this year. As of this video, they're not at a new high. But here's something that's interesting, and I mentioned this, during strong capital markets, all aspects of the capital markets rise to new high. The Dow Jones Utility Average, and I put this just right here, this average is minus 5% year to date. Okay, you can argue with me, and a counter argument to that is the fact that utilities don't perform real well when interest rates go up. I wonder if that's going to be in the video. If it is, I'm going to leave it. The other, and I will shoot right back to you. This is funny. The transportation. Now, the transports are down 10% year to date. Transports are more important, and if we were in a healthy market, this would be at a new high. We haven't figured this out. There's been multiple, I've seen multiple studies that say it's never been this divergent before. This down 10%, that it's just never, we're researching that a little bit. One of two things has to happen. Either this starts leveling off and coming back, or the major indexes follow suit. We don't see any big warning flags, but as I say here, we're monitoring this very, very closely because it is not a sign of a super healthy market. Well, that's it. That's your May financial planning tip, the joint tenants with rights of survivorship. This is the video that goes with it, and our divergent capital markets. We'll keep you posted on that. Hope everybody has a good start to their summer, and thanks as always.